The strengthening economy and the Fed in focus. The central bank wrapping up its March meeting yesterday with plans to keep rates at low levels amid ongoing economic recovery efforts. We got the minutes from the meeting yesterday. Most Federal Reserve officials saying that rates are expected to remain near zero through 2023 and bond purchases remaining steady. Joining me right now is the president of the Federal Reserve Bank of Dallas, Robert Kaplan. Robert, it's always a pleasure to see you. Thanks very much for being here this morning.
Good to see you, Maria.
Well, I thought it was interesting that there was so much conversation based on those minutes about why interest rates have moved so fast in a short period of time. Assess where we are for us in terms of the economy and the backdrop as you see it.
As has been said, the economy is strengthening. Our outlook now at the Dallas Fed is for GDP growth this year to be in the range of 6.5%. And I know there's some private forecasters who have more aggressive forecasts than that. And in terms of interest rates, pre-pandemic, I mean, February of 2020, the 10-year Treasury was in the range of 1.75% to 2%. So I've been assuming and expecting that as the economy recovers, it wouldn't surprise me to see rates back up to that level. And I think that's a healthy sign, not an alarming sign.
Yeah, I mean, you're seeing, I guess, the market correspond to what we're seeing on the raw data, which has been very strong. Now, we spoke with the former chairman of the Economic Council under President Bush, Larry Lindsay, this week, and he had fears about rates going much higher. I want you to listen to what Larry told me on this program last week and get your take on the 10-year. Watch this. You've seen the interest rates move up to 1.7% on the 10-year. Granted, this is not a high level. We're still talking about very low rates, but the move with which this has happened has been fast.
It's been very fast, and we've got a lot further to go. By the end of the year, I would expect the 10-year to be very close to 3%.
Close to 3%. President Kaplan, what do you make of that?
I talk a lot to forecasters and market participants to get their views, and so that's one view. I would say there are a number of divergent views from that, but my own view, taking all that in, is again, I think I would expect to see rates drift up back to where they were pre-pandemic. Hard for me to judge. Jury's out whether they're going to drift up much higher than they were pre-pandemic, but I'm watching it very carefully.
So, Robert, what are you hearing from the business community? I know that you speak with a lot of outside economists, but also managers of actual businesses who are running a balance sheet, who actually see the demand and understand the supply and constraints that come along with it. What are they saying in terms of their concerns and what's driving this growth?
So it depends a lot right now on what sector they're in. If they were in the goods producing sectors, they've had pretty good years in 2020, and they're expecting continued increased demand going forward. In the service sectors, where it's more uneven, but a number of the service sectors are seeing meaningful improvement. But I'd say across the board, most that I talk to expect a price surge during this year. And they're already seeing it, and we're already talking about it. Semiconductors, metals, wood, packaging products, broad range of other items. So you're going to see a price surge this year. The thing they're more skeptical about, the businesses I talk to, is whether that will translate beyond 2021 into year after year price increases. And I think on that, the jury is very much out.
Yeah, I mean, I think you make the point that everyone's talking about right now, and that is, where are we seeing inflation, if at all? And we certainly have seen price increases in the food area. Things that are kitchen table products have seen an increase in price. Have we seen that passed on to the consumer? Are you expecting inflation to be passed on to the consumer over the near term?
So what I'm seeing, and again, it's across a range of industries. I'm seeing companies telling me they're getting a little, they're being bolder than and willing to take more risk in trying to pass on prices to consumers. They're not convinced. They're not, depending on the industry, they're not yet convinced which of these increases will stick. But this price surge they're seeing year over year, they can't make up for it with cost controls. So they're going to have to take some risk to try to pass it on. But again, that's a 2021 thing. And most of them tell me that not always, but these supply-demand imbalances, will be worked out over the next year. The semiconductor issue may take longer, may take closer to 18 months to work out because it's such a huge amount of CapEx that's necessary to build semiconductor capacity.
Yeah, and on the semiconductor story, that brings in the China story. But before I get there, look, you just said you are expecting growth in 2021, 6.5%, which is a strong number. Others have even gone higher than that. Nancy Lazar is one of our frequent guests who's looking for 9% growth in 2021. How important is policy from the federal government in terms of potentially dampening that? Because President Biden's proposed $2.25 trillion spending plan includes raising the corporate tax rate, as you know, to 28%. The president has said he's willing to negotiate on that rate, but a new study from the National Association of Manufacturers reports that the corporate tax rate hike could cost the U.S. 1 million jobs. So what do you see as the cause and effect? I mean, what do you see as an impact on a growth story that is certainly getting better, but could see, headwinds as taxes go higher?
So most businesses, again, that I speak with have already internalized and are expecting some increase in their taxes. They're trying to manage around it. You're seeing, and I'll defer to outside forecasters, you're already seeing price adjustments being forecast or earnings adjustments for the S&P 500 earnings. And most of the forecasts based on what's being discussed, I would view those adjustments as modest, not substantial. And I think most businesses are thinking about ways to manage this. Do I think right now these discussions would be enough to slow down growth or the improvement we see? It wouldn't cause me right now to make a material adjustment to my forecast.
And what about the policy as it relates to energy? Robert, you are there in Texas, and we know that the XL pipeline was canceled, causing a lot of grief for a lot of people, jobs going away, and that reverberates throughout the energy space. Your thoughts on the impact of growth in energy and the oil space, and there are so many industries related to that as a result of that policy change?
Yeah, so here's the big challenge in the energy business. We know that fossil fuels in the years ahead will be a smaller and smaller percentage of U.S. consumption and global consumption, on the one hand. On the other hand, that doesn't mean that you're not going to have substantial demand for fossil fuels. We think we will, and not for just years, but for decades. So we're going to need a strong and healthy fossil fuel industry, even as that industry is investing substantial amounts in carbon capture and greenhouse gas emission reduction techniques. And there's substantial investment in wind, solar, energy, battery storage. But I do think we need to manage this transition properly, because what you want to avoid is a case where demand for fossil fuels is going up and you don't have enough supply because it's so hard for that industry to attract capital, and you get these price spikes which affect everyday consumers. And so we need a healthy fossil fuel industry, but it's going to be a smaller and smaller percentage of total energy consumption.
Yeah, you make a good point. That's one of those unintended consequences that you really don't want to see when looking at policy. Robert, you'll be my special guest this weekend on Wall Street. We look forward to talking with you then. Thank you so much for joining us this morning.
Thanks, Maria. Good to talk to you.